I'll kick the event off now.
All right, excellent. Thanks, Dan. Welcome everybody to the Bookmap Academy, and this is the weekly meeting that we have, and we go through. It's a coaching and mentoring program, and you will journal your trades. Journaling is a big part of it. Marking up your charts, some of the elements on the chart. What are you looking at? Why did you make the decisions? Where did you get in, and why? And then we will give feedback on it. It's in our YouTube, in our Discord channel, and we are happy to, as a community, we give feedback and take a look at others. And then we have this meeting to give you direct feedback and open up the mic for those of you who participated in it and made some content. Then we want to hear what you have to say about it, and then we will give our suggestions in real time as well. So it's about your content. So we've got a couple of events. A couple of things to mention to you guys here. Number one is this, we're back with the Blue Jacket competition, but doing it in a different way. You will send up your marked up charts onto X, Instagram, or LinkedIn. And with the hashtag free blue jacket, and that's it. You'll see it on bookmap.com/bluejacket. So we're not doing it through Discord. We're doing it this way via social media. We did the same thing for our desktop competition, TradeStation competition. So we decided that this is a great way to do it also for the blue jacket. And this is the new blue jacket, all right, hoodie. Anyway, if you're interested in that, go to, mark up your charts in X, Instagram, or LinkedIn. And then Bruce's pilot program. So I had mentioned to you guys that we'd have a few more details about it. I just sent that information out. You guys will probably see it there. And I'll go into the details here about it, but I just want to go over it very briefly right now, and we can talk about it in a bit. It is a coaching and mentoring program, but in a much different light. It is extremely focused, and you will look at one setup and you will journal it, but you will replay it in replay mode. This is I'm convinced this is one of the best ways and quickest ways to become a good trader. So it is akin to those video poker players, or those virtual race car drivers. They get thousands of hours on the track. They get thousands of hands played like within a couple of days, and that kind of repetition will very quickly get you up the chain in your trading, and become a much better trader much more quickly, and you will know exactly what you're looking for, right? So we're using the replay mode in Bookmap. We have very specific replay files you will have access to, and then you will take those trades, rewind it, play it again. You can speed up the feed as well, and you will start to build an edge using the journal. You will be routing them to the journal. Anyway, for those of you signed up, let me just show you a few different things. We just moved them around, and they are now over here. Let me show you. Hold on. Okay. So it's under the Bookmap Academy here. So for those of you who are in the pilot program, don't be alarmed here. Here it is here, Bruce's pilot program. And we also have a voice channel for it. Now, you need to sign up for it. And there's a couple of things in here. This is a very specific program or project that we have running here, this pilot program. You will need to have Bookmap Global or Global Plus to get access. You have to have it. There's just no way around it. So if you don't have it, then you don't get to hang out. We don't want the noise. It's very focused. So you'll see in here as you start to go through it. Let's see. we have all these files that we just uploaded in here, and you're going to see all sorts of stuff in here. Very specific setup, and very studied and focused, with only 4 criteria. But once you get into the program, you guys will see. I just want to kind of give an overlay of it here. Now go up to the pinned area here, and you'll see, let me see here, can I even do that? Okay, there we go. If you go up to the pinned area, you'll see all of the feeds in here, as well as a document that I just uploaded in here that will talk about the pilot program, this one here. So click on that and you'll get access to it. You'll download it here and you can get access to what the pilot program is about. All right, so you should have the role if you signed up with the web page. I'll show you where that web page is. It is right here, and I'll put this into the chat for you guys. And I think we sent an @ here, or @ everyone within the pilot program chat room, so you guys will have access in there, and check it out. Start replaying your feed files, and this is you're off in a great new direction here, that you'll build an edge, something you know and you trust, and you have an advantage in the marketplace. All right, so that's that. Let's move on here into the Academy, and I don't think there's anything else that we needed to cover. Oh, we do have this slide here about the Academy and what we're going through. As you guys probably noted in the last few days, how important number 1 and number 2 are, and the impetus of what's moving the market. Let's see, Laura had, she's in the pilot program, and she had written some things about situational awareness of what's happening in the market. And one of the most important things to be aware of, though, is what's moving the market in the news, and the relationship between geopolitical events and what's going on out there. So the big move that's happened is we were kind of basing in consolidation for like 4 or 5 days there, and then there was some panic in the market, and it moved outside of that, and it continued to move. That's what was moving the market. There's about interest rates and other things. There's economic data. There's worries about tech, etc. This was moving the market. It is so important, because if you know what's moving the market, then you can start to home in on your key levels of what you're looking for on your higher time frame, and you can pick number 3 here, the right strategy that meets the scenario you're looking for. So we are trending outside of the range. We are starting to look for value. What is the value of the instrument at that time? Okay, if it's the NQ or the ES, or if it's a stock that you're looking at, it doesn't matter. And we're looking for continuation until we see something different. Right, and then you pick your setups. So in that environment, for example, you would be looking, depends on your time frame, but you'd be looking for continuation trades. All right, and then it's at that point, you know what you're doing, you know the impetus, you know your key levels. Then it comes down to your checklist of grading your setup, and determining the risk and the sizing, and then you're looking at your order flow within Bookmap to really gain that extra edge, and execute and manage your trade properly. All right, and this is a big part of the Bookmap Academy. All right, I just wanted to mention that, of what's kind of happening out there, and we can get the discussion going as well. But let's see, I thought it was worthy to cover that. And let's see here, go over. Let's start with Coach Vinny. Which one do you have, Vinny, here?
Hey, Bruce, how you doing today?
Doing well, Vinny. How are you doing? Oh, I
Great,
got it.
thank you. All
I,
right, you
I'm
got it. All
I'm
right.
sorry. I found it. Okay, here we go. Vinny, you've got a few different people here. Let's see who's in the room right now, and we can invite them up to the stage. All right.
I got Florian. I think Greenie is here, and I'm Malik.
Okay. Okay. Excellent. Let's see. Why don't we start with Greenie? There he is. Okay. And invite him up to the stage, and let's jump in. Take it away, Vinny.
Right.
Hey guys,
Yes,
thanks for having me.
Hi, Greenie.
Greenie, how you doing?
Good. Thank you very much. How are you guys?
Great, thank you. Were you green today trading in the stock market?
Yeah, I was actually.
Congratulations. All right, way to go. All right.
Thank you very
Well,
much.
you're welcome. I have your one of your charts up over here, and I think you can see it. Charts up over here, and I thought what you did really good was you identified a number of key aspects in your trade. Looks like you identified your liquid support. You had a CVD signal long. At least these are some of the things that I also identified as well to go along with what you had. You had some orders climbing higher, and then you had your entry. And I'm assuming that blue circle is where you did enter, and which was great setup because this is a really great. This is something I wanted to go ahead and share with everyone as well. You had your liquid support, and then you had your orders climbing higher, which I thought was just terrific over here. And then I didn't put in a trend break, but it looks like you also had a trend break as well to coincide with those orders climbing higher. So this was an outstanding setup that you have here. If I would have taken an exit, I mean, there was one target that you could have exited was the liquid above, which was 3 points. But I believe your target, you use VPOC, and then maybe you can share with us a little bit more about your strategy. And I think you got 5 or 6 points out of that. So I had some questions, such as, hey, you had a great setup. Would you mind sharing that with us, please? And also, if you might, please share your sweep on your LBN, and how did you identify this? Whether you use a DOM or whether you use a book, or can you please expand upon that? And
Yes.
yeah, I'll throw it to Greenie. Once Greenie's done, we'll toss it back to Bruce, and then maybe me and you can, finalize our comments back and forth in the end. Okay, right to you, Greenie. Well done.
Yes, of course. Hey guys. Okay, so I actually trade lately only mean reversion. It's like a very good trade because you can actually use it in trending markets and also in balanced markets. In trending markets, you can enter in actually low volume nodes inside the trend, and in balanced market, you can just trade back to the mean always. And this currently was, I guess, balanced market. At least on the smaller fractal, you can see the balanced market. It went away from the mean, from the VPOC, and I saw that there is a liquidity level and it wasn't able to break it through. So when I saw that there was another liquidity added there, you can see that level there. That was like a trigger for me that, okay, we can try this one. And this may be a high probability trade back to the mean. Lately, I am, for example, using sweeps for this because sweeps in combination with these liquidity levels are even better, but this is also very good in my opinion. The stop is really just below maybe 2 ticks or 3 ticks below the liquidity level always. Not much more because then I don't get a good risk reward. So I aim for max maybe 16 ticks or something like that. If it's more than that, I don't take a trade.
So your risk reward looks like it was about 4 to 1. All right, and I did again. Can you just share with us a little bit more how you were able to identify your sweeps on the low volume node or zone?
Currently there was no sweep, but there was the liquidity. That's another order flow trigger. I always look for some order flow triggers. I look for lately. I look for balanced markets on smaller fractals where this behavior occurs pretty often. Then it goes away from the mean, then it goes back, then it goes away, then it goes back. And if, for example, I see something like this, that there is another liquidity being added, that just like confirms my narration, and then I enter, and then I try to go back to the mean.
I see. Yeah. So once you see the orders added, it provides more conviction for you. Correct.
Yeah.
Ah, okay, and that certainly what you had here. Okay, good identification on that as well, and something also that the rest of the group can go ahead and take notice and apply as well. All right, let's toss it back to Bruce.
Yeah. Oh, thanks, Vinny. Thanks, Greenie. Let's see. It's kind of I don't know. I'm finding it kind of hard to give some really good feedback here. I don't see a whole lot of data. What you said all makes sense. I mean, it's trending kind of. I'm not really sure what's over here. I can kind of look at maybe some of the SVP profiles, etc., to see we're trending down, and trading into high liquidity, doesn't trade into this one, kind of bounces around, cannot trade into that high liquidity. They bid up here at this level, and the sellers don't take it. So once you kind of notice that, then you're looking for it to come back into the mean. Then you talked about your risk reward, etc. So makes all pretty good sense to me. It's kind of hard to I just don't see many more other details to comment on, to be honest. That's all. I don't know if that makes sense.
It does, because I know he used a very small time frame, so maybe that's why if it's time, and that's probably why he was able to go ahead and take this trade, because it was such micro scale where you probably want to see a bigger picture. Am I right?
Yeah, a bit more. I know that I like the like you see this so many times, especially around reversals. Is the well, the bidding up is one thing here, but this level of liquidity comes in, and a lot of times it's kind of funny, because we're trending down, there's momentum to the downside, and then you'll see some of these levels of liquidity, like again, it's kind of hard to see, but I know there's some here, but this one came in here, right? And we, after trading through this in here, and then you even see potential spoof here, right? And the market's not buying it, and it's not filling this liquidity either, but it's not buying this either. So it just kind of chops around, and then a lot of times, long story short, is if this liquidity is a new element in here that skews the order book, and we get more sellers to trade into it, then we'll have to see if it comes back. In this case, it didn't really push it down maybe a little bit, but the buyers wanted it, so they started to come in and start to show some interest. It looks like, based off your volume in here someplace, and then charged up after it. So great identifying that target, I think, and this play between the liquidity on the offer, the price action, and the appetite for that liquidity it's a good combo there. Let's I don't know, John, if we see John in here, it's always a pleasure to have him up here as a giving us feedback and a coach. Are you free, John? Can we invite you up here?
Hello,
Hey,
can you hear me?
hey, there he
Okay,
is. How are you?
good, thank you. And you?
Doing well, thanks. So
So,
I don't
yeah,
know how much you caught of all that, but
I,
any feedback you have?
I did catch all of it, and I do see the entry. I do see volume missing there. I agree with everything that's been discussed. But as far as the entry is concerned, and I think Greenie mentioned it, it would have been nice to get a sweep there, or even a stop run, or a stop sweep, some order flow event that would help you to get long. But as you were just talking about that new liquidity that came in at 64.20, that was a vital piece of information because it's right at the previous high where you would expect the market to revisit at least. So there's a couple of good things there that can justify the trade. I think it's a good trade. I just would have loved to have seen a little bit more volume come in at the time of the entry, whether it was stop volume or sweep volume or volume moving to the upside. But
Yeah, yeah.
everything else, all good. Right. So you're just lacking
Ye-
volume. Like you were just saying, Bruce, the volume didn't come in till later. So, it's a way to identify the difference between an A trade and an A plus trade. And that is Grady mentioned that with an order flow event. And what I'm saying on top of that is timely volume, trade volume.
Yeah, I totally agree with this one that the sweep would be much better. But
Hmm.
I just like the liquidity above on 20, which you
Hmm.
mentioned, and
Hmm.
also the one which is supporting on 1625. That one was the one which like told me that yeah, let's try it.
Yeah. There's two things going on there, right? It's holding, and then you just didn't have enough sell volume to get down to it and even violate it to the downside. So I would agree. That's a bullish look. Yes, sir.
All
And you can
right,
trade off of that. Yep.
all right. Let's see. No other comments. And that's it. I think that's everything you had for Greenie. Is that right, Vinny?
Yep, all done with Greenie.
Okay, okay.
Outstanding, Greenie.
All right. Yeah, nice one, Greenie.
Thank you very much, guys.
Okay. All right. Thank you.
Excellent work.
See ya.
Let's see. Florian. No, I don't see him in here. And Malik. No.
Don't see Malik here either. Maybe he'll come in later. I
Okay.
actually get a few
Yeah.
things about Malik.
Yeah. Okay. I saw that. Okay. All right. Let's move on and let's go over. Let's see here. Stan. Stan wasn't able to join us, nor Jack, nor David. These summer months, that's how it is. So we also have AB Crypto. I don't know if he's in here or
I
not.
think David is enjoying his time on the beach in Texas.
Yeah, exactly.
We all should be there, huh?
Yeah, exactly. Um, let's see, AB Crypto is in here or not? No.
Yeah.
Yeah? Oh, there he is.
Second.
Okay, yeah, got him. All right. And let's get your file up here. And this was from Moby. Okay. So and Moby never joins us. I mean, every week though he offers a file though, which is fantastic. Very consistent. And but he's it's like I don't know 2 a.m. his time or something. So East Western Australia. All right. So let's see. I see all sorts of stuff in here, but AB Crypto, if you want to walk us through. And you got your checklist, which looks great. You got your liquidity. You got some trend line or horizontal structures in here as well. Everything's looking good. Why don't you detail it out for us a bit? Oh, we cannot hear you. Oh, okay, he's going to try again. All right, one more time here.
Now, can you hear me?
Yes, we can hear you now. Excellent.
Okay. So, first of all, I was seeing that at the open, the market respect that liquidity resistance on the upper side. It never took it, and then it started to trend down. I saw that the price, because I use Bookmap and price action at the same time. I saw that the I'm sorry, my English is a little bit bad. I'm a Spanish speaker, so I'm sorry.
You're doing just great. Don't worry about it.
So I saw that after the big pull down, the aggressors start to accumulate. That part was just over the London lows, and then I saw that the price went through London lows doing a liquidity swap, and then I saw that the buyers gained a lot of power, and they absorb all that move, that exactly that same move. And in my chart, it made a pattern that I use a lot to enter. So as I saw the fair value get inverted, I wait for the retest. I entered that in that place. I put my stop under the invalidation area. I know there was a liquidity, but if the price goes down, it just invalidate my analysis. It's okay. I'm okay with that. And my main target, it was the upper zone liquidity.
Perfect.
So after I saw that thing, I was studying the trade, and I saw that it may be, I don't know, it's not my main playbook, but it looks a little bit like a trend line breaking accumulation. We see it start trending, then it accumulates, it breaks structure, and then use even the puck as a support, and then it continues up to the liquidity in the upper side.
Yeah, it's beautiful. I mean, it's not quite has the criteria, but it has many pieces of that trend line break and accumulation. You did a great job because you really noticed this play between the liquidity on the offer, on the bid, and I really like this one here, especially the sweep and the trade through, crushes everybody. Everybody's out of the market, trades down into one more level of liquidity in here, and then it raises back up. And what do you find? You find buyers accumulating in here. This is great because they're coming in pretty big, so you start to look for you held really nicely here all the way back up to high of the day, really nice play between offer and bid, and a really big wide channel in here. As the guys in the pilot program know, one of the things we're looking for is, and the distinction here, is that we look for a lot of liquidity on the bid getting filled at least like 3 levels, and it doesn't and that would be the passive liquidity, and it doesn't quite match some of that, but other things are in here, like the break of the structure, the accumulation on the aggressor side, and some other things, but looks great. I think you did a great job here. What else was I going to mention in here? I'm kind of losing it already. Entry on this pullback in here, pretty aggressive. Maybe a little bit better up here, waiting for those buyers to come back in, and make sure that they're coming back in. But I get it. It's a pullback, and this is kind of where you want it, where you have some structure that broke down here, pulled back exactly to it. You got in and you carried it on up, and you held it, which is really great. All the way back up here. Let's see. Oh, this is what I was going to mention. Even though trend line break accumulation, maybe it's missing a piece or two of the criteria. It doesn't matter. Like the beauty of that setup is you will probably see that those elements on any reversal, head and shoulders, a double bottom, whatever it is, it kind of has to happen. There is typically very high liquidity getting filled passively, and then one more push, it kind of maybe stops everybody out, and then there has to be a break of structure. Of course, there has to be, and typically that break of structure happens on higher volume from the other side and the aggressors, and then they have to follow through. Typically these things happen at key levels. It just helps if it's at a key level as well. That's more than enough comments. Let me turn it over to Vinny.
Bruce, outstanding. Now I got to try and go after you. All right, I'll do my best. Yeah, okay. You have two charts here, and I read your write-up, and you talked about your IFVG, and I see what you're talking about. You went ahead and saw the IFVG, and you went ahead and saw the wick. Now this is on the candlestick chart, so you waited until the wick went through it and then popped up. Now I'm wondering, after you saw that wick, did you enter after that? So that would be my first question. And number two would be, that might be the reason why you entered aggressively, because you've probably seen this pattern over and over. In combination with the book, you're using the liquid support as well. So you had a powerful combination here, where you felt highly confident according to what I see here on both your charts. Secondly is, I would like to ask, I'm assuming, so it looks like if you targeted that liquidity way up there, it almost looks like an 80 point trade. So maybe you can also let us know what your risk reward is. Did you have your stop underneath that liquid support? If so, so I was just curious what your R&R was on that one, and how you manage your stop loss, or underneath the IFVG, because I think I read your write-up. Third thing is, right. Now you have a really bigger scale over here with both your chart and also your break-in structure. And if I were to draw a line using your break-in structure, it looks like it consolidated underneath the break-in structure from the bigger scale. And so my question would be also is, what confidence did you have in maintaining, staying in the trade when from the bigger time scale it looked like it was still underneath the break-in structure? So that was my other bigger question as well. But once it did break in the larger scale, it looks like you took it right on up to that higher day over there, right where the liquid resistance is. And maybe you can share with me, maybe I'm correct or maybe I'm not, and maybe you can also let me know. Just let us know a little bit more about your system, if that's okay.
Yeah. Of course. So the first thing, when I use this setup, this is my main setup. I've been using it for a few years now. So yes, I was like, I have seen this pattern in the candlestick. I think I shared the trade too in price action. So when I saw the IFB and the retest, I entered right there because it's a well-studied pattern that I've been using some years now. the stop loss was below that liquidity support, because if the price keeps going down, it just invalidates my analysis. Okay, my son is here. I'm sorry. Okay, baby's here. Sorry. So that's why I enter really aggressive. Is a pattern that I have studied a lot, and I use it. I use the Bookmap with my main strategy. What I have saw is that now that I'm using the Bookmap, I don't speculate about the liquidity zone. So I already was using like the swap of the London highs, London lows, or previous day lows, and then I would like to see that inversion. But now I can see when actually the price swept that liquidity, respect that liquidity support, and then the buyers came, like supporting the movement and absorbing the sellers that went through that first accumulation. That movement in the buyers was what made my IFBE. So I given more trust to that setup. The other question was why I still hold it, because it was beneath the accumulation, right?
Correct. It was. I mean, at least from what I'm seeing on your bigger picture, it still
Yeah.
stayed. It was still underneath. It didn't quite break
So
that structure. Does that make sense? You see what I'm saying?
Yes, of course. I have a rule. If that from the low to the high that create the breakout structure, I use Fibonacci levels. If the price don't close below the 50% level, I will still hold the trade. If the price goes below that 50%, I usually close with what I have in profit, or I just took a small loss. But that's like a rule that I have. So it was respecting that 50% level, so I still hold it, and it went back up.
Okay. Yes. Okay.
You can see the chart. I think I posted the chart. It was like a 1-4, 1-5 trade, risk reward.
Yeah. Very good. Yeah, those IFVGs are very, very powerful, and you definitely applied it here. So that was well done. Did you take it all the way up to the higher liquidity target zone?
Yeah.
Okay. Yeah, I read your write up. Looks like it was another 5-digit day for you.
Yes, that's right.
Okay. Yeah. Also, So that's obviously your system here is very, very powerful. It's something that I use as well. I also read some some of some of the comments that were provided. I think by Moby. He if you have a chance, he provided some insight as well. He said that he would like to know more about how you use the volume bars, and also how the information on your subgraph relates to your analysis and actions you took. He said, otherwise, well done and a great trade.
The volume bars is I'm so sorry, I'm new to the book, but is that thing below? I don't know the names of the the parts of the book, but still. Okay,
Yeah,
okay,
okay.
that volume bars. Okay. Actually, I don't use those volume bars. What I like to use is the SRVP. I don't know if you can move a little bit to the right.
Oh, just a second. Sorry. Yep.
Yeah. So I like to use the SRVP because I have seen that when the price breaks with good volume over the point of control, if the volumes goes down, I don't know if I'm saying this right. As I say, I'm new to the Bookmap. If the volumes goes down like in an angle, I see that the price tends to move like more violent. I'm talking about the upper side. I don't know if you can see the ask from the point of control in the SRVP, the SVP. Yeah.
Yeah.
Yes, the SVB in that center level is the point of control. If that part trends like an angle, it goes low in volume. I see that the price tend to move like real violent, like real. I don't know how to say this in English. I'm so sorry. Like hard. It do strong moves up. It the same works to the downside. If I see less volume, I see that it do like really big moves when it go to that area of low volume on the SVP.
Okay.
Yes, and would you mind sharing with us what does SRVP mean?
Session range volume profile.
Okay.
Session range volume profile. See, that the middle one is the one that I use. Yeah.
Yeah. Okay, those were my questions. I have a few more, but I think that's about a good one. But otherwise, yeah, I like your system, and something that I use as well. And I understand how you are generating your trade and your process. And I also learned a few things. So thank you very much. And let's toss it right back to John. How about John, please?
Okay. I'd love for you to spend a little time looking at the volume bars. I think that will help you in your volume analysis. What you can do, those volume bars, I presume they're delta bars. Is that what you selected in Bookmap?
I think so.
It
Yeah.
looks like
Okay.
it. Yeah.
All right. So I prefer the delta bars. I think that's what they are. But what I would suggest is on the left-hand side, you can't see it on your screen, but on the left-hand side of Bookmap, where the value is for the maximum bar, you can tag your mouse to that and stretch that up. And those bars are transparent to the main chart, so they're not going to affect the scaling of the price action. But if you expand that up, then you can begin to see very clearly on the basis of time, as time unfolds, what volume is doing on a net basis. And in fact, just when you entered, that was a low volume pullback, because you had volume come up and then it retraced and you decided to get in. But where it retraced there was on very little volume. And we see great value to that. That it adds to that pattern. And that's another reason why you could justify your entry there, the volume being very low. And then volume started to come in. So that,
That's
I love
awesome. I didn't saw that. That's really nice.
Right. So, and that's where those volume bars, like I said, as time unfolds, I mean, you're looking at it on the column, which is fine because you're seeing the totality of the volume. But on that x-axis, you can see exactly what the volume is doing in real time. And I think that would be a more direct way to answer the question in terms of volume. I think you ought to just spend a little time practicing with it and see if it helps. But everything else, wonderful.
Thank you.
Yes, sir.
Oh, just one thing extra I wanted to add was, so it looks like it was 10 o'clock news here that actually kind of made, I mean, like you mentioned, this is something we find again and again, like there's kind of a trend line break and accumulation, here, but it fails. And then it, does it again. But there's news here at 10. And that definitely was a game changer. It retested here just like John was just saying. But at this point here, that I don't see much selling at all after 10. So maybe can you elaborate a little bit on that, of what happened, what was the news event, or how you might have played that? Because I assume it just because of the lack of liquidity here right at the 10 a.m.
Yeah, let me check this out real quick. Let me open my chart because I don't remember this trade. Okay.
I don't know which day it is.
Yeah, I think it was on. Yeah, it was on Monday.
On Monday. Okay, let's take a quick look here. What do we have?
No, we didn't have news that day, I think.
Okay, on your chart, it looks like you have August 18th.
August 18th? Yeah. August 18th. It was Monday.
It was Monday then. Yeah, okay, so there wasn't any news. I mean, I don't see anything listed. I don't know, something housing data, but it's no big deal. Okay, all right. Well, that's kind of odd. I mean, yeah, you can see it, but anyway, no, really great stuff. You know what? I wanted to. We got some experts in here. Shark, Trading's Life, Laura, that are experts with the trend line, break and accumulation setup. If you guys had any other additional comments, raise your hand and we'll bring you up. No?
Yeah, actually, I didn't use the trend line accumulation and breaking accumulation setup. It was afterward. I was studying the trade that I saw those trends. You say, hey, it might look like, but I didn't see the passive accumulation, so that's why I didn't post it as a trend line breaking accumulation.
Okay. Yeah. Good. Okay. Well, I guess Shark, Laura, and Trading's Life, no comments. But
you don't use any of the information in the subgraph. Then you said, do you? Is that part of your
down
analysis?
here?
Yeah. Do you
Got all sorts of stuff.
Yeah. Do you read that or?
No, I don't know how to use that.
Okay, so what you should do, my suggestion would be to take them off. You're using processor power to make all those calculations and display them to the screen. So if they're not a part of your analysis, why use that processing resource, right? So that would be my suggestion. Save everything first, and then go in and maybe get rid of some of that stuff and save yourself some clock ticks.
Of course. I don't know how to change that. I'm sorry. I'm really new to this.
I'm sure there's somewhere. I'll try to find you a link where Bruce will demonstrate how.
I can help you out tomorrow morning during the webinar if you like. AB Crypto. So
perfect.
Let's see. Shark is raising his hand here. Let's bring him on up. Come on down, Shark.
Well, he's coming on down. You can just hit that arrow to go ahead and minimize it and get rid of the subchart if you want.
Yeah, right here.
Can you hear me, Bruce?
Yes, there you are, Shark.
Okay, just want to make sure I'm not having audio issues like last week. Real brief, I just wanted to say I like the way he's drawn the fractal trend line inside of the higher time frame trend line. And he gets that entry and he grabs that entry on the pullback like you had discussed recently, right? We have some accumulation there, and then price pulls back into that liquidity, and that's where he grabs his entry. I do like that, and I do think it fits the trade model well.
Yeah, good stuff. All right. I mean, that was a good one. All sorts of feedback for you, AB Crypto, and nice setup, and nice read and nice hold too. Like takeaways from it, like was the your reasoning for the entry here was if it does fail here, you're not going to have that big of a. You're going to have less of a stop. And then the other element here was holding. If this thing gets above, if it does that 50%, that kind of, I mean, you can see it. There's kind of a measured move in here, basically, or a, this line in here. I mean, here it broke down and here it broke down, but it came back into the range and it held. You decided, or your rule is, if it holds the 50%, I'm still in it.
Exactly.
Yeah, really nice. All right. I think that's it. And let's thanks for sharing that one, and let's move on to
Excellent.
next one here. Okay, there we go. Okay. Oh, it's you, John.
Oh,
Come on
my.
down.
Oh, this guy.
He scares me. I don't know about this guy.
Oh, man.
I don't know about this
There's
guy.
all kinds of bad habits here.
Take it away, John.
All kinds of liquidity to shoot for. So I have two VWAPs, and one is the one I always anchor from the previous day at 1800 Eastern Standard Time. That's how my standard VWAP exists. But in this instance, the pivot actually came before 1800 when all this liquidity showed up. So the way in which I use an anchored VWAP is when liquidity is there, giving me a target, and then I look for the big pivot, the lowest pivot point to anchor my VWAP, which is what I did here. That was the lowest part of the session. And so that gave me a couple of lines there as far as VWAP is concerned. And all I'm doing is I'm asking, what's the best fit moving up towards that liquidity? And it fell in very nicely there. So as prices made their way up through VWAP, I got long with all that liquidity upstairs for my target. And for the most part, in the early morning session, that was about it. So it was a great way to map out the target and use those VWAPs as a way to get in, along with volume. You've got volume coming in here. You see with the larger volume dots. So I can immediately see that that they are buying in there, and they're going to push through, hopefully VWAP. And then my stop would be pretty tight, and the risk to reward was acceptable.
Great. I mean, okay. So the your stop is down here.
Yeah.
Okay.
It's pretty. I mean, I have it there because it would be a little bit congested as far as the labeling is concerned. But in this instance, with this volume coming in, that would need to keep going. Otherwise, I'm out. So that stop probably is a little generous in comparison to what I would do. That volume that I'm entering into has to continue. That buying has to continue for me to be in. Otherwise, I just scratch it.
Okay.
You follow me?
Yeah. Understood.
Yeah.
Understood.
So I would not wait for that. If it's a low volume pull, I would not wait for any pullback whatsoever. This is not a pullback based trade. This is a shot out of a cannon type of trade that has to keep going. Otherwise, the reason for being there no longer exists.
Right. Yeah. Makes sense. So you've got here. This is the cash close for crude somewhere around in here. I guess 230 or whatever it is. And then you got the markets closed here. So you took the trade at like 1:30 a.m. or something. Is that right?
Yeah.
Okay. And this liquidity had been in there the entire session.
Yeah.
And not only was it here, they flipped it
Yep.
and added it a little bit higher.
And even more on top of that, Bruce.
Yeah, that's right.
Yeah.
So even more up here.
Yeah.
And it's this was maybe this down here was a significant. This was low of day, I guess. Right? Is that right? Or low of session? Okay. No, I was just trying to get a feel for some of that.
Yeah. Lots of volume there too, all net negative, and they failed to push it any further to the downside, and then it pivoted, reversed from there. So that's a significant pivot for me. Yes.
Right.
Yeah.
No, beautiful stuff. This is it's kind of funny. It's a little different than your normal setups, John. It's kind of David-esque. I know you've taken it before. I mean, but it's like that train is moving. You're not looking for a pullback, and it's a momentum move, and it should work pretty quickly. And boy, did it worked out just great. And so you've got your VWAPs. Now you're above it, and you're above it on volume. And that's what really kicked it off for you. Is that right?
It is right behind all that liquidity that's up there.
Okay.
That's for the trade.
Got you.
So I may be a little bit aggressive down here, but the reason, if that liquidity wouldn't be up there, it probably wouldn't be a trade.
Yeah.
Would need to be some liquidity up there, but all that liquidity up there and then all that stacked up on top of that, that's a magnet for me. So I'm looking for a reason, anything, just, and then volume comes in and I thought, okay, let me join them. And if they quit, I'll quit.
Yeah, great. I mean, boy, they wanted it. They charged right up after it. And beautiful trade. I don't have any other. Let me kind of let it sink in a little bit, but because of the VWAP, I mean, the VWAPs are constricting here, but due to the volume breaking through, and now it's above it. Now you're thinking, okay, it's going to, I mean, even without VWAP, I mean, this looks good. But maybe explain a little bit more on the VWAP. Just to kind of get a feel for it.
Yeah, you've got two working there. I mean, the magenta VWAP, that just started
here.
Right, exactly.
Yeah.
Whereas the other one goes from the pivot low.
Yeah, and this was, so you got your anchored at the pivot and it's holding.
Yeah.
And then you got the new session one here and you're above it.
Yes.
Okay.
Yeah.
Okay.
Yeah. So of the two, I would say, I have that one that's fixed and that I run. But for this early in the morning, I mean, you want to take it. The best VWAP, in my view, is going to be from the last pivot. If that liquidity is up there giving me some kind of impetus for even drawing the VWAP, that's huge for me. And otherwise I wouldn't bother. But what I'm looking for is that best fit analysis to take me up to that liquidity up there. And that was anchoring the VWAP at the last pivot low. And that's standard, my standard way in which I use anchored VWAP. I know there are books written about it, but that's what I do. I got to have liquidity marking a target, and then I need to have a pivot where I can anchor from to guide me to it.
Yeah. Okay. Really nice stuff. Let's see. I have no other comments, but I guess would you still be looking for another potential entry here? And then I guess you did it come up here? Would you be looking for?
I don't believe it did. I believe what you're seeing right there was it for a while. I don't remember to tell you. I know it didn't go up there like gangbusters. I think eventually it did, but there was a lot of, my reasons for the trade and my plan for the trade was for that first block, being on the conservative side, that first block of liquidity where I placed my target. So instead of looking for more, I was a little heavy coming in on here with contracts because of that liquidity. I scale accordingly.
Yeah.
So I have trades that I take with 2 contracts. I have trades that I take with more than 2. And this was one which I took, I started turning on accounts. I have a copy trader and I started turning on stuff as I saw this unfolding.
Gotcha.
So yeah.
Okay.
Yeah. So I can get it up. Yeah. It's a conservative move. I can add more contracts and then be done with it.
Great.
And that was it.
Okay. Great stuff. Vinny, jump on in.
Yeah, this is Vinny. Not much to add from what you said, Bruce. This is I agree. This is a little different than some of his previous posts as charts. Yeah, I did see the target up there with the liquidity. I might have been able to look at this, analyze it even a little more thoroughly, but I see he's on a 3-hour time scale on that. If it was, I don't know, 30 minutes, we might have been able to see a little bit more. and he would be able to share with us even more about this particular trade and setup. But nevertheless, I did read about some of the comments that Moby wrote. He did ask, he said he's curious to know how reliable the AVWAP has been for you in a tight stop, situation for you. That was his question.
We answered that with the volume. He's asking about the stop.
Yeah. So he all he said is he was just curious how reliable that has been for you with the tight stop.
Mm-hmm. Well, yeah, that's why I do it. And yes, it's based upon that volume that's coming into the market at a key level. And in this case, it was the pair of VWAPs, along with, and again, the leading thing here is the liquidity that's presenting itself above. That's huge. I mean, they want to transact there, which they did. So it's almost as if they're pulling prices up rather than prices driving up. And in this case, you had both. You have prices being pulled up, being attracted, and then you have volume coming in, trading to it. Oh yeah, that's a bread and butter tight stop, because in order for that to stop, something would have to change. The whole emphasis, the whole impetus for the trade changes, and then yeah, my stop would need to be really tight there, and in that way, it works. Yes. Yeah, 'cause
Otherwise, your checklist.
I don't want to be in it otherwise. I don't want to be in the trade otherwise unless it's going to take off right from here like a cannon.
Yeah, your checklist. You always have your checklist up there. That's terrific. It identifies all of your key features on your trade. And Moby says, "Nice trade and well done."
That's great. Good.
All right. So
Bruce never says that. He just continues to find things wrong.
I always just nitpick away. So, no, I just something. A few things. Number one, this is a pullback trade, and you were identifying a low of the day, right? Well, first off, you got all this liquidity here, and it stays in here overnight, or through the close. No one's moving anything, and here you've got low of the day. You've got the pull away. Then you're using your anchored VWAP as that low of a day, as like, okay, well, this would be a pullback to it. It's holding, and then you got the other VWAP here, and it's above it, but it's on volume. Then at that point, like you've been eyeing this, and now you have an excuse for it to go from here to here.
Yep.
Yeah. Yep. Yeah. It's almost infallible.
You get that thrust. You limit your exposure time, which is what I'm all about.
Yeah.
You can see how quickly I can get that first target. Now I've got a winning trade. Stop comes up to break even plus a tick, and away it goes. And yeah, that's what I look for.
Yeah, nice stuff. I think I don't know. I don't know. Shark, do you have anything you want to add?
I have a quick question, John.
Mhm.
Your entries there, are you just whacking the offer to get in right when you want to get in, or are you placing an order?
I am entering on the offer on the dome when I see that volume dot.
You just get right in at that dot.
I do. Yes. Yeah. I'm not about placing orders. Very rarely. I
Yeah.
want to see it unfold. I want to see the volume coming in my favor. And I'm not going to know that. I can't plan for that. Yeah.
Yeah, I like that confidence in that spot on decision making.
So it's off the dome. I guess it's a limit at best offer, a buy limit. Okay.
Yeah, I just buy the offer.
Just jump on it.
Yeah.
Okay. All right. I don't know. I mean, there's all sorts of nice little structural things in here, but I don't even want to get into that because the clarity and the focus of the trade criteria in here is like is quite beautiful. Nothing else, John. Yeah, let's
Good
move
deal.
on here,
Thank you.
let's see. I guess we got a couple more here, and let's see if anyone else has come back in. No. But shout out to Matt, Snowman, Pikes Peak, and a few others in here. Dewsman, well, I know you've been active. We covered you last week. If you guys put it into the just copy and paste your link into the your marked up charts into a spreadsheet. We will go through it. Anyway, that's all that's required. All right, so let's take a look at. You're looking at the Russell. Yeah. Okay.
Mhm.
All right. Let's see. I got liquidity down here, John, and then I guess target is up here. This liquidity up here. And
Keep going.
walk us through.
Keep going. You know it as much as
Oh,
me.
I know. But like,
Okay, so yeah.
I do actually have a really important comment on because is very similar to what we just looked at. And anyway, continue on, and I'll chime in a little later.
So yeah, we have supply liquidity above, which represents allows me to identify a potential target for getting long. Firstly, second, there's demand liquidity below. Number two, the market does go down there and it fills it. You've got some decent volume down there, but it doesn't take it down much further, and then it starts to reverse. And you can see there I highlight with number 6. That's basically a low volume progression. You work your way down, but on a net basis, yeah, right where that line is, number 6, Bruce. Yeah, right between yeah, there you go. Low volume taking it down, and that's a lower standard deviation band off the VWAP, that dotted line. So that's VWAP minus 2 standard deviations. And then, but the most important thing about this area is spot gamma's work is a huge part of how I plan my trades, and that vol trigger is probably one of the most important key levels that's a part of our daily preparation work. And so here we're teetering at that level. It can go either way, and when it does go either way, it usually goes in a big way. That's why I'm looking at that liquidity above, and I'm saying this has the potential for a sizable move, because that's how that vol trigger level works. And so on that basis, we had some buy volume traders come in, and I bought with it. Stop was pretty close. We had some liquidity at VWAP, which represents my first target, back up into the range. So there's 3 things working there. We've got liquidity, we've got the top end of the previous range, and VWAP, all can serve as magnets. And so you have 3 things there. Creating that potential first target level. And then it's just a matter of following with the stop and see if the market will continue up to liquidity, which it did.
Yeah. No, and very quickly. So, I guess the key area here is, well, you got liquidity here. It filled, like you said,
Yep.
it goes through, but then you got your divergence here. And then you see some buy volume come in, and take a shot at it here up to the liquidity. And you were eyeing this one early on anyway. You're always eyeing the liquidity levels early.
Yes.
So no, a couple of questions like on this, because we see it time and again, you doing this, and it's really great. Well, first off, one thing is like this. I mean, this is really kind of a weird move, and the Russell, I don't really get a feel for it a lot of times. Like, there's more sell volume here. It just looks like it's almost a data anomaly, and yet it's charging right up. Here it starts to pick up a little bit more, and in some of these areas up in here, and it's charging down on volume here. I don't know. I have to even maybe check with the programmers on this, but it just doesn't look right. But anyway, that's one thing, and then another thing. So one of the big things for your setups is you're identifying the key level of liquidity first. Okay, can it go there? Is it possible? What's going to propel it to go there? And then where it can get kind of confusing, I think, for traders is listening to these webinars can think, oh well, I saw John, others, like they're identifying high liquidity, goes right to it. I'm just going to do that. And no, it's not quite like that. Like this is a key level, and you're trading it from liquidity that passively got filled here, failed to go further, then it reverses and comes back in, and now you're interested in targeting this up here because it failed at this point, and then you're looking for those aggressors at this point to come in, reduce some risk up here at your VWAP, and then hold for the runner up to your target. So my question is, like, I mean, most of the time you wait for this kind of thing to unfold from liquidity to liquidity level, and that's a great way. That's how you reduce a lot of your risk. And what I guess what I'm getting at here is, how maybe I don't know what the question really is. Like, trading it from liquidity level to liquidity level instead of, like, a lot of times, like, maybe it's a continuation pattern, or something like that, and you're like, well, maybe I kind of missed it here, but you are not getting in. I've never really seen you get in some of these areas unless it's a higher time frame thing. And the reason being is your risk, right? So you're really watching and being very attentive to what happens at these levels here, at these key levels. Once you get your kind of confirmation, then you go in as quickly as you can to reduce the risk, and then look for your targets. Reduce some risk at target 1, and then take full target 2.
Well, what I see is a reversal of order flow, right? As you start early in the chart coming down to the vol trigger, you can see that price level, Bookmap sees it the same way. There's a lot of liquidity there. And going down to that price level, look at the volume. I mean, there's a pretty, relatively speaking, as it makes its way down to the vol trigger, there's quite a bit of volume down there that dries up when it starts to pivot. And I've highlighted that with number 6. So I wasn't just looking at the last couple of bars. I was looking at that whole move to the downside. Volume was coming down, and then it just kind of dried up as it started to reverse at a key level. I have liquidity above, and I also have another spot gamma level up there, which is a 0 gamma. That's also a key area. So I like to trade from key areas, one to the other, and if liquidity lines up with those, it makes it all better. And oftentimes the liquidity is going to be even more important in my work, because I'm gonna target my exits and my entries off of those. But that's what I see going on. I see a reversal in order flow in general, both volume and liquidity. It takes out the liquidity on high volume, volume dries up, reverses.
Yeah.
I can get back at least into the range. Whatever it goes from there, no, but who knows? All I'm really interested in is I think I got a pretty good chance of getting to that first target. Once that happens, that pays my bills. I move my stop up. The second contract grows the account.
Yeah. I mean,
Does that answer what you were getting at? As far as,
Yeah, I mean,
yeah.
I'm what I'm trying to kind of elaborate. So, other traders in here start to understand this key level relationship, and then the target already being established because there's traders that want to trade up here, and then from your key level, something fails in here, and you get order flow kind of confirmation that is now telling us that this level is not holding, and where is it most likely to go next would be your next key level or liquidity level.
Right.
And then that kind of reasoning, I guess, is what I was looking for. Maybe either if you agreed or you disagreed or you elaborate further on it, because I see some content, or some people, they're getting in thinking like, well, it's a magnet, liquidity is a magnet, should go to it. No, it's about the context, and do they want to go after it, and at a key level that failed, that's where you really got the reduced risk, and we don't know if it's going to come here, but if it fails and you get especially some people going the wrong way in here, this is a great target, so that, I guess that's where I was coming from on it.
Okay. I understand.
Vinny, I don't know, you have any other comments?
Bruce, yes, I have a few comments. All right, nice job at sharing some of that wealth of education that you share with all of us. Yeah, just regarding John's chart here and the timing of it, it looks like it's pretty close to the open, which is really really good opportune time to go ahead, to take advantage of some of the greater volume, and you typically about 1.5 or 2 hours after the open is an ideal time to go ahead and execute some of your setups and systems. I was curious if there was a pullback with your entry. I also like the way what Bruce talked about with the liquid over there. It took it out and failed to go even lower a little bit. I noticed that your dots, at least for me anyway, just seems to be on top of each other. So sometimes it may be a little bit of a challenge for me to identify if there was a pullback, maybe hiding some of the liquid that could be, show up, such as a book flip, that may be able to show the audience even more of a potential of the order flow. But otherwise, yeah, you can see your first target was right at that high for 4 points, which was terrific. And then you just let the rest of it kind of travel all the way up to that liquid right up on top, which was a great target to exit at 8 points. So yeah. So you might be a little bit of a trend break. Maybe Shark can go ahead and share with us as well. But that's it.
Thanks.
I do have another question, John. I always want to reverse engineer your ideas. You that volatility trigger, your key level there, you said that can go one way or the other, and when it does, it goes. So coming into this, is your plan binary in any way? Like if that were to continue south, would you jump into that? Or you're specifically after that liquid target up above?
Well, you're right. That vol trigger is one of those levels where a sizable move generally moves off of it, which is why I key off of it. And I don't trade to Russell all that often. But when this level comes into play, and that's part of my preparation work, early in the morning, I'm going through charts and I'm looking for just this thing. I trade the vol trigger off of stocks as well because it is so pivotal. There's a lot of option play involved there. So yes, of course, now I would need to see in this instance if the market went down past the vol trigger, I would need to see some formation that would enable me to get short, such as a pullback back up to the area and then a failure, and then I would need to see liquidity below. So the trade would have to unfold. Would I just get short if that gets taken out? No. I need to have, there are certain things I need to have in order to take a trade. I'd have to see new volume, new liquidity coming in below at lower levels. And I would like to see a low volume retracement back up to the vol trigger and then a failure from there. And see sell volume come into the market. That would enable me to locate a hook where I could get short, but with a close stop. You know me, I like to keep it real tight. And the order flow read, along with the order flow events that Bookmap will often present to the screen, you can do that. I mean, you can key off the sweeps and the stop runs, which is really what I like to do. You don't always get those, but so I'm looking for those. I would need to see a pivot, a failure, and then a pivot back up to it to get short, to answer your question, Shark.
Yeah, your stops are yeah, it makes absolute sense. Your stops are always so tight.
So tight.
You're like
Yep.
you're like a special operative, right? Like military,
Well,
you
it's
you see the opportunity, and that plan comes in an instant, and you're in the trade.
yeah, because you have to think that down there, before my entry, some stops were hit. Some people got nailed down there. And that's really what I'm keying on. So if that's the case, and a couple of trapped sellers did get tied up down there, did get filled, well, then that makes for a good reversal, because now you have panic buying to get out for where all the short action was taken. So
And you're reading that in
that's what I'm reading.
the exhaustion of the buy delta down
Yeah,
there,
yeah.
or the exhaustion of the sell delta into
That's right.
buyers.
Sell delta and then lower. Yeah, exactly. Yeah. Followed by,
Awesome.
some of the volume dots coming in. So the buying coming in. And, now that I'm looking at it, I see Bruce's point where it looks kind of funky going up. But to be honest with you, I don't even care. I get that first contract off. I just, bring my stop up to a manageable level. I made money. And then if the rest unfolds, that wasn't stellar action. It's not like the S&P or the NASDAQ where it's just going to drive up. Russell's a little different in that respect, because if you look at what's driving the NASDAQ, there's a couple of key high capitalized stocks that drive that thing. That's why it's so wild. This is more of an even distribution among smaller companies. So you're not going to have, which is why I like it. You don't have that kind of whipsaw action because you don't have those big players in there on the Russell. And that's in fact, I oftentimes will go to the Russell when the S&P and the NASDAQ are too wild, because it is a bit more distributed in terms of the makeup of the index.
I'm gonna have to take a look at it. Fantastic, John. Thank you for the insight. I appreciate it.
My pleasure.
Yeah, and just I think one more thing or note, John. You've mentioned this several times about the key levels, and I think this was like last week. I think Vinny was showing some a potential. And I'm not throwing you under the bus, Vinny, but another.
Get used to it, Benny. If you hang in here, this is going to happen.
Yeah. That you pointed out a long or a pullback, and then price drove up to an area, and then what John didn't take it because he said, well, I'm looking at my options levels, and these key levels on the options though, is that, as well as the order flow and all the other things that we mentioned in here. But this is a really key one here, because you have a lot of faith and trust in these levels. There's you've kind of like summed it up and determined there's so much money at these levels that the price really isn't going to move through them very much, or if it does, like, it would be shocking to you, or it would be a massive move the other way. So you're really keying in on your options key levels in here, and then the order flow around them.
Well, that vol trigger is actually a model from Brent. Okay, so it's not it doesn't correspond to a certain strike. It takes all of them, and it also there's a volatility component in there. So the reason why I have confidence is that I guess it was been like 6 years ago now, when Bookmap entertained Brent to give a webinar. I started with them then. I didn't understand hardly any of it, so I just recorded everything. Every day that they came out with values, I developed a database. And so the reason why I'm confident in that volatility trigger is that it's all basis to the SPX. And I have an SPX file that's years old in terms of charting. And I have 6 years of data going back that plots this vol trigger. It's being expressed on this chart, but I used the SPX actually as a model, but I've kept a database going back for when I just joined, thinking that I don't understand this now, but if I maintain the data on it, when I do understand it, I can go back and study it, which is what I did. And that's why that's so critical, because I have years of charting, historical verification. That's a level that I really need to pay attention to. Brent is spot on with this, and I know he continues to work at it. But it's like I said, it's not a strike per se, unlike gamma level 1, gamma level 2, put walls and call walls. In fact, I think he might even have that vol trigger as a trademark. I hope he does, because it is his work. It's original work. And my charts show that it's quite good, and that's why I pay attention to it.
Yeah, got you. Yeah, great stuff. So let's. I don't have any other comments, guys. Do you? Or should we move on? All right, let's move on. And that's the Russell. We got one more, John.
Oh my word.
Yeah. Why don't you start? I'll double check on some of the other files here and make sure that see if anyone else is in here that maybe can also go. Why don't you? Go ahead, John. And
can you back it up a little bit?
Sure.
It's slightly off my screen. Just kind of reduce the magnification. There you go. Maybe okay. All right. So the balance of liquidity is below VWAP, firstly, and I labeled that as number 1. My goodness, I didn't put my checklist on here. Okay. And so, number 1 identifies the imbalance of liquidity, those liquidity levels that are below price and below VWAP. And I identify those early on as my price targets. I have VWAP working, and I have prices trading just below it and failing to get above it. And I traded short a reversal with a lot of sell volume coming into the market. And my first target would be that first band of liquidity down below. And that corresponds to a relatively high level of gamma, which is the next small line down right there. So that's a critical area. And of course, the volatility trigger, again, it's a key level. It often acts as a magnet. It acts as a support, resistance, and acts as a magnet. And we have liquidity down there. So you've got a couple of factors all saying the same thing. We're looking to go down. They want to transact at lower prices. How do I get in here? So my answer was at the VWAP. I get that first contract off, then it's just a matter of managing my risk on the remaining contracts to see if we can get down to the vol trigger. So that first contract off, that takes me down to just about where key gamma is. And then if the market continues to go down to the vol trigger, along with that other liquidity that's down below, then I can capitalize on that. But I'm not losing. Once I get that first contract off, I got to win.
Oh, got you. Okay, so this was kind of what I was trying to, I guess, allude to or describe earlier. So this is a momentum move. No question about it. And you've got your high volume node, or at least it's kind of hard to see, but it's exploring this was, I guess, all lows of the day, I guess, at that point. Yeah, must have been. This is moving away. And you're looking for, you're waiting, you're watching and looking for, you've already identified liquidity. Okay, you know that. You've got also some of your key options levels in here. And then you noted right from the get-go that you've got all the price action is below the VWAP here. So at that point, you're looking for some sort of failure up here to move away from this high volume node. And then you see it spikes up, doesn't hold, selling comes in, you get in, and you drive down to your first target. So because your timing here is just beautiful. Putting, and also the entry is just beautiful. So, how often, like, do you find, like, sometimes, like, well, maybe I mean, you wouldn't have gotten in here. Why not? Is it just because
I'm looking for an event? I'm looking for an event. Ideally, I'd like to see a buy sweep in here, a buy stop run, something like that. Instead, the event was that large volume dot to the downside. You had some buying in there, and it was met immediately by some just huge gladiator of selling action. And so that's a way for me to ask, well, maybe I can slide in right with these boys and ride this thing down. So I need to have an event. And up until that large volume dot, that's why I love those volume dots, because it's visual, it's real time. You can see it developing, whether it's expanding or contracting. And I think that's huge for me. I know lots of people love the footprint charts, but I get lost in the numbers. But I can see those dots. I can see them growing, and I just I think that's key for my timing, because I can jump on that pretty quick once I see what I'm looking for. And one such thing is that large volume dot.
Right. So as soon as that happens, now your targets all come into focus.
Yeah. Well, yeah.
Boy, John, that was so good. We might have to use that as a soundbite for marketing later.
I tell you, it's made all the difference for me. You can't see that on a bar chart, Bruce. No way can you see that detail unfold. So no, I'm very comfortable with what the Bookmap does for me to help me read what I need to be doing. And it's black and white. It's either there or it's not. And in fact, if I don't have that event there, I'm just watching it. Well, damn, I didn't catch that, but I didn't get what I needed. What I needed was an event, and that was that huge dot.
Yeah. Because I mean, like, we see it time and again here. Like, it's the same setup, extremely consistent. It's rather, I hate to use the word, to say magical, but like the timing is just spot on, and you're not in much drawdown or pain. The thing usually after this event, due to the other factors that you already identified, after this event, then it unwinds and then it unfolds. So this, like, how did you? Okay, I mean, I understand. Yeah. We sit around, we wait for the event. It's mentally draining. This is a big part of trading. I find, or I feel, that you've got to sit around and you have to keep watching and waiting. It's looking good, but not good enough. I'm waiting for that one thing, and you got to really kind of home in on it, and stalk it basically. Any kind of tips and tricks for all of us regarding that element of it, more of a kind of a
Sure.
sitting and waiting, watching psychological element?
And until I see these liquidity maps make up what we see on the chart, I'm not sitting there perched. I'm taking it easy mentally. I'm not glued to the screens. I'm looking at it, but unless and until these screens present themselves with this imbalance of liquidity where I can look at it and see my potential targets right off, I know where they are. Unless and until they're there, I'm not spending that mental energy, that mental fuel, because you can't look at this from start to finish, from the open to the close with the level of intensity that we need to day trade. No way. But this is the way that I budget that. And so once these things start falling into play, the first thing is the levels. Second thing is where's the liquidity? Where's VWAP? And so I've created this. It's very systematic. It's always the same thing. It's in the same order because that's how I do it. It's how I plan for it. It's how I execute it, and it's how I review it. And so that daily cycle has created this checklist that's in order. That's in that order, so I can see it as this is developing. And unless those first two steps are developing, I don't look really. I kind of ease myself into the chair. But once these things start to develop to the screen, that's what perks me up. Start to sit up straight, get in front, hold the mouse, and as these things unfold systematically and in this progression, I know what I'm looking for. I'm looking for that last little bit of information, and in this case, it was that large volume, and that was the trigger, and that's how I can be on top of it. So I'm not looking to make 10 decisions when I'm squeezing the trade off. I've already made 9 of them. I just need the last one.
Yeah,
That's
got you. So, and if you didn't get this, would you miss it?
Yeah, I would miss it.
Okay.
No, I need to have an event. I really would like to have it's hard to say. That's a lot of liquidity down there, and there was nothing above, and VWAP was there. I just wouldn't be in love with it that much. And I'm not sure I would actually, because really that volume creates the catalyst. So no, I actually, as much as I would like to, I probably wouldn't, Bruce.
Yeah.
I need to see that explosion, that pop that's going to take me, because I don't want to sit there and languish. I don't. In fact, as soon as it starts to do that stuff, I'll get out. I'm not going to sit there and play that. No, sir. It has to go immediately for me, or I'm gone.
It's great. It's really great to hear. I mean, like it's really amazing work, John. I mean, because this is where everyone wants to get in. And they don't want to languish. Usually momentum traders, this is where they're getting in.
Yeah.
After volume below the structure, it wants to move. And it's not a bad entry, it's not bad at all. You've just, but you've given up, let's say 67 on up to 80 or 79. So already like three or 4 points maybe. You've already kind of lost, and your risk is higher.
Adding a little bit of risk, right?
Yeah.
You're adding a little bit of risk to it. Yeah.
And you might get that one more push, one more pullback, one more spike up above, and then you get your volume event, and then it moves.
Yeah.
It's really great. I'm going to shut up, and I'm going to turn it over to Vinny, because I know he's going to be very angry about this checklist.
Hey there, Bruce. No, I don't have any comments. You guys said about everything. He's identified his first and second targets, and the same setup over and over again, and that's about it.
Oh man, I'm sorry, Vinny. I'll let you go first next time because I
couldn't say it any better than you, Bruce.
No, you do. You have all sorts of things you add in. So anyway, I elaborate too much. My fault. My bad, Vinny. I'm sorry. But if you or Shark have any other comments, please fire away.
Just real quick, more reverse engineering, John.
Sure.
You have number 2 in the purple. Is that a volatility trigger level as well?
That's a vol trigger from Spot Gamma. Yes.
Okay, yes. And so you use those as targets as well as entry points.
Yes, I use them as generically. I use them as levels of interest, Shark. So they can
Levels of interest. Okay.
levels of
Okay.
interest.
And
That's what I do. So either it's a put wall where it's at the highest concentration of puts. These are all levels of interest. Now this vol trigger, it is a model by Brent. It's a proprietary model. It's the line in the sand actually for the session is what usually how I use it. And it serves as a magnet. Traders will trade to it. It just seems that way. So yes, yeah, that's it's a very important level to me. That's been proven for 5 or 6 years now. You want
okay,
to know.
just and real quick about your execution. You get the big selling dot.
Yeah.
Are you just whacking the bid right there? Or are you getting it on that little bit of
Yeah.
aggressive buying back into the level?
Hitting the bid. Hitting the bid.
Getting the bid right on the selling.
Yep. Hit on the bid.
And your targets, are you placing a passive bid on the price ladder and that target sits, or you're jumping out there as well?
Those targets entries, they go in as limit orders before I
They
put
go
the
in,
trade
okay.
on. I'm in that early, and I'm
Oh,
just above
you
the
put them in.
established.
You put them in before the trade.
I do.
Oh, okay.
I do.
You
And
put them in before the trade, and
I
are
do.
you looking at? You're obviously putting them like right above that bid on the price ladder where you see it in your dome.
I'm front running that liquidity there, that cluster of
Fantastic.
liquidity. Yeah, but that goes in absolutely. And that really sets me. That's when I really start to sit up straight in the chair. So okay, I'm engaged here. Now, give me the event. Give me something. I need something. Otherwise, I just cancel them off. But I want to be early in that queue at those levels.
That's why the targets are going in first.
Oh yeah,
Awesome.
absolutely. Yeah, I want to go. It's first in, first out, and you can see it in
Yeah.
Bookmap. Where you are, and yeah,
Awesome. Thanks.
yes sir.
Okay. Let's see here. Guys, we got like about 15 minutes left. I was going to demo this replay mode thing, but you know what? We've got one for Duzman, and why don't we go over Duzman, and then we'll, I think, end on that. And let's see, where is he? Hold on a minute, guys. Sorry. Duzman been doing some great work. There we go. Okay. All right. So that's Brian C. Oh, hold on. No, I know. Oh, here he is. Yeah. Okay. This one. This is you. And let's bring you on up to the stage.
Hello, hello.
Hello.
How are you guys?
Doing well. How are you doing?
Yeah, I'm good. Thank you. Good.
So let's see here. Why don't you again walk us through? You got your checklist here. You've got your chart all nicely marked up, and it looks like another good momentum trade here that you grabbed. So take us through it.
Yeah, for sure. Just let me get to it on my end.
That was from today,
You
yesterday.
you guys yesterday.
Yeah.
I just want to see what happened beforehand. But I guess it's okay for now. But regardless, price was coming up, and that number 2 over there at that consolidation, I was waiting for price to break above the VWAP, the RTH VWAP. So once it did make that break, I saw there was volume, the volume bars beneath it as well. Saw it did with that, so I entered long, and my stop was at 63.87.75. I think I brought it up higher a bit later. I don't remember clearly, but yeah, once I saw the volume by the RTH VWAP, I took the long.
Okay, so then what we've got here is the volume picking up here, the aggressors starting to move price, and you're above VWAP, and you see again more volume starting to come in above your little consolidation, small consolidation here. So you enter, and then you're looking to trade it up to, you got your high liquidity target here. And then you said full gain though up here at 02. Is that right?
Yes, that's correct.
Okay. Okay. So and what in the full target would be the LVN up here, right? Is that right?
Yeah, I actually, if I remember correctly, I had it a bit higher, but I saw that liquidity come in at 402, and then actually, no, was that the case? No, right before, I'm sorry, the big liquidity before it,
Yeah.
and no, not that one, not that one. Yes, that one. When I saw that happening and price struggling, I just brought it to 402, and yeah, I held it from there, expecting just to test the outer edge of the distribution.
Okay. Okay. So yeah, still looking for one more kind of last push. Even though I just, if you can explain a little bit. So because target here, lots of liquidity passively getting filled, a little bit more energy here, but then the sell volume really starts to pick up in here, but you're still looking for one more push back up above, up here. That's right?
Yes, essentially, like that was the case, but like I was looking for higher even before this. I was looking for overnight low, but when I was taking the trade, that big set of liquidity didn't show up. So when that did start to show up, then I brought it lower. Like everything on the right side, that didn't occur when I chose to bring it to 402.
Okay. Okay. Understood. Okay. And yeah, I don't really have too many comments in here. It's a pretty straightforward momentum trade, move up. You still see volume bars picking up, high liquidity. It's it's getting filled. They're charging into it, through it, back to it. Still some energy in here. Peters out and comes back down and kind of tests the high volume node, or an area in the consolidation here, but you're still finding support, and one more push and your exit up here. So yeah, I don't have any other questions. I don't know what Vinny or John. Vinny, why don't you go ahead? We lose Vinny? I think we lost Vinny. Yeah, we did. So I don't know. Let's see, John, if you have any comments.
Yeah, nicely done. Although I'm not seeing holding on to it beyond 6,400, where that large band of liquidity is in there. I mean, I could see that reversing down to 92. I mean, to get up to your node, going up to that 6,400 with that liquidity up there would have been a great trade for me. And but I'm not seeing it because the liquidity doesn't support it, and the market did challenge that position a bit, and I would not have been comfortable with that. I'd have been thrilled to get that 6,400 band of liquidity in there, but beyond that, I think it just takes on more risk that I would have trouble justifying. But I'm glad it worked. But in practice, I try to take my targets where those liquidity levels are. In fact, on the way up, I would have been taking a partial at your first high liquidity target marked A, and then move up from there. Always looking to get paid wherever the liquidity map says I can. But well done, nicely done.
Thank you, John.
Yes, sir.
You are correct. Like I would have been better off taking it at the 400. Um, I just held for the sake of it. To be frank, it is on sim, so
Mhm.
the actual outcome wasn't really a big concern. It won't really change the scenario.
Yeah.
And in terms of taking some off, I actually did at 63.94. So I do two lots minimum, like the way Tom does. Minimum two lots. I take one off and then I let the other one ride.
Nice.
So yeah, like I should take it off at 400 though. That is correct.
Okay. So let's see. It's a great momentum trade. And you know, just yeah, I'm not quite clear. I mean, I know the VWAP and the way you described it on the entry here. It's just kind of harder for me to see like what's happening over here on the left hand side. And what's this relative volume in here? This is where you got your big boost up. So I don't have a context here to quite see the you know, previous areas and what does this volume boost here mean to anything else over here on the left. But you know, you had your criteria. You're looking for that momentum above the VWAP and you got in. So I don't really have any more comments. And we lost Vinny, poor Vinny, and Shark. I don't know if there's anything that you have.
The liquidity above that helps to build the case of a slow progression move to the upside, a grinding move to the upside. That's what that high liquidity up there means to me, and I think that's what he was doing. He's getting long and on the basis that this is a momentum grind up to that liquidity level above.
Yeah. A question on that, John, and maybe
not my dance, but yeah, I hear you.
This would be like helpful because the way that you're looking at liquidity is not like this. So, for example, let me if I just use the browser here to hide the you know, liquidity that we know developed here. And we go forward here. It's like, okay, well, here's target. Looks pretty good. Okay. But, you know, no. Okay, well, maybe. I don't know. Maybe. And then now this looks like a great target. Absolutely. And then, okay, pull back and high liquidity coming in up here. I'm not quite sure yet, but then, okay, yep, more buyers starting to come back in. Looks like they want it. This is a very different dynamic of going through it like that than looking at some of your charts where you're looking for this first, not for it to come in. It's already there. And maybe you can elaborate a little bit more on that, or is it as simple as that?
Well, it is simple as that, but in this trade, you know, I had a target at A. I didn't have anything beyond that because it wasn't there. This, like I was saying, you know, you have this liquidity that's building into this as you go. I would have been happy at A because that's what was on the chart, and that's probably what I would have planned for. Going up higher to 6,400 when that new liquidity was added, that would be another trade for me. Right. So my planning, if I were to get long where he did, the extent of the trade would have been at that high liquidity target at A, period. I wouldn't have been looking beyond that. But what I'm saying is that, you know, he continued to hold on because, or at least in my eyes, I would have been able to hold on if I wanted to with this building a liquidity above and very little below. So the imbalance was building to the upside. And that's when you see those progressive grinds to the upside where it just doesn't stop, and you see that liquidity being added above, almost seemingly pulling it up.
Yeah, great stuff. So yeah, some pretty good feedback there. Shark, I don't know if you had any additional comments. If not, then why don't we wrap it up, guys? I mean, like, sorry, Vinny, I don't know what happened to you. It looks like yeah, maybe you had a crash or outage or something there. But good session. Some really nice, subtle details. Some great trades by everybody, and I think some really good feedback as well. But you know, really starting to get into more of the nitty gritty in here, which is great. Yeah, let's. I guess tomorrow I'll elaborate a little bit more. You know, I'll be in contact with you guys for this pilot program a bit more of what's going on in there, etc. But you should have now access to. I even uploaded today's replay file so that you can replay even today's S&P as well as NASDAQ on a trend line break and accumulation trade, and start to get involved into your journal, etc. So yeah, if you guys are part of the program or you want, then here, let me just put that link back in here one more time for you guys, and we'll call it a day. So all right, it is in, oops, Discord. There you go. Gambit, you're welcome. And yeah, just yeah, please, you know, fill out your spreadsheet, and you know, we'll cover your material as well. And let me put it over here in YouTube. And yep, question here about is Bookmap mainly for futures? No, we have a lot of stock traders, a lot. We also have a lot of crypto traders. Well, less crypto traders, to be honest. But we started with futures, so we have a lot of futures traders. We moved into stocks as well, and then moved on also to crypto when it started to grow. Thanks, guys. Thanks, everybody. Coaches, thank you so much. Really great stuff. And those that submitted their spreadsheet content, thank you. With some great trades. So let's keep it up, and we'll see you tomorrow in the all markets webinar. If you have any questions, some of you were asking about you know, some of the features, etc. So happy to cover it at that point if needed. All right, so John, take us out, and we'll another nice session, and we'll do it again next week.
Excellent work. I'd like to see some more people show up and get reviewed. But yeah, very good, and keep working at it. You're on the right path. You have some great people in here to be able to answer your questions as you go. Bruce, of course, is an expert with Bookmap, and I think it's extremely generous of him to offer his time for you to come in here. I'd like to see more people use that. I know it certainly has helped me a lot. So have a good evening.
Great. Thank you, John. Thank you, everybody.
Thanks.